In this video, I want to show you two very powerful TradingView indicators that will really blow your mind if you haven't heard of these tools before. Definitely consider using them in your trading because they will be responsible for huge gains in your account in 2023 and beyond. Guys, if you want to see videos like this more often, hit that subscribe button and leave a like to this video. So, without wasting any time, let's start with the first indicator, which is called the Divergence for Many Indicators version 4 by Lonesome the Blue. Be sure to add it to your collection. This tool basically checks every single candle for different divergences. The indicator inserts diverges in on a MACD, RSI, MACD histogram, stochastic, CCI momentum, IBB volume weighted MACD, and check in money flow whenever the indicator spots a bullish divergence. A yellow label is printed on a chart, and whenever it spots a bearish divergence, it prints a dark blue label above the price. The more indicators it found divergences on, the stronger the signal is. Some of these signals can be quite accurate, but I do not recommend using this tool on its own. So in order to dramatically increase the accuracy of these signals, let's add the exponential moving average or EMA to the chart. Let's have a quick pause here. If you don't know the whole definition of moving averages, or let's say dynamic support and resistance levels, make sure to check the description down below. I previously made a video about it, completely dedicated session. Enjoy it, it's all for free. Change its length from 9 to 200. So, having these two indicators on the chart, when do you think would be the best time to buy? In my opinion, the best time to buy would be when the market makes a pullback into the exponential moving average. So typically, whenever the price action is moving above the EMA and then it pulls back into it, the market usually respects this price and makes a rejection. So if you have a bullish divergence on at least two indicators, at a time the pullback happens, this is a strong signal that the price will continue to go up. By adding the EMA to the chart, we also eliminated a lot of potential fake signals. Here are a couple of more examples for successful long trades. We see the price action pulled back into the EMA and it immediately rejected off of it. A bullish divergence was found. Set your stop loss slightly below the EMA and target at least 2 times the risk. Another quick pause here. If you don't know where exactly to put your stop loss and which leverage to choose is the best and what should your position sizing be, don't worry again. Previously, I made completely dedicated sessions about risk to reward ratio, stop losses, target points. Everything you're gonna need is down in the description. Make sure to check them out, especially if you're a beginner. That's all for you. Here's another long trade, and this one is much better. We see the price respected the EMA and we had a bullish divergence on a couple of indicators. The same thing right here. The price pulled back into the EMA and we had a strong bullish divergence. You can even exit the trade as soon as the indicator finds a bearish divergence. This way, you give yourself a chance to make really good profits. For short trades, wait for the price action to drop below the EMA. This is the confirmation of a trend change from bullish to bearish. Then, wait for a pullback into the EMA and for the indicator to spot a bearish divergence on at least 2 indicators. Here's another great example for a short trade. We see the price action perfectly respected the EMA and the indicator found these divergences, as you can see. Okay, now let's move on to indicator number 2. But before that, if you want to trade crypto on one of the best crypto exchanges platform out there, I highly recommend to check out BuyBit. It has one of the lowest fees out there, lots of good features. I talked about it previously, especially if you're a beginner. I highly recommend to watch my tutorial on BuyBit, but it doesn't matter if you want to trade on other platforms, it's going to work out for you as well. The link for that video is down in the description. But if you want to take even more benefit out of trading on BuyBit, you have have a chance of winning up to $30,000 of a mystery box by just signing up into BuyBit, and by using my affiliate link down in the description, you have an extra chance of winning an extra $5,000 worth of USDT, so don't miss this chance. All you need is just to sign up, do your KYC procedure, deposit at least 100 USDT and start trading on it. Enjoy it. This one is called the TMA Overlay. You can access this indicator by clicking the indicators button and type in TMA Overlay. The indicator you're looking for is this one, created by this amazing trader/programmer. Thanks to him, by the way. Before we start using this tool, let's make some adjustments in the settings. First of all, let's disable the trade sessions and these types of candlesticks. This indicator helps identify momentum by offering a visual representation of engulfing candlestick patterns overlaid with some smooth moving averages. Another quick pause here. If you don't know the whole concept of reading the candlestick patterns, previously I made completely dedicated 4 sessions about it, broke it down, all the things you need about candlestick patterns and how to read these Japanese candlesticks. If you're a beginner, I highly recommend to watch those videos, because no matter what strategy you want to choose and trade with, these are the things that you need as the fundamental basic goods in your trading arsenal. The moving averages you can see on a chart are 21, 50, 100 and 200 SMAs. The second part of the indicator are these green and red triangles. For a buy signal to appear, 3 bearish candlesticks in a row must be formed in a market. Exactly opposite is true for a sell signal. If the SMAs are aligned in a way so that on the top goes wide, then it goes green, yellow, and red. The market is officially in an uptrend. Any sell signals that happen during these times are invalid. On the other hand, when the moving averages are aligned in a way so that on top goes 200, then it goes 100, 50, and 21 SMA, the market is officially in a downtrend. Obviously, all the buy signals that happen during this time are cancelled. There are many strategies you can create with this indicator, but let me show you the one that is almost never wrong. For the strategy, you need to add one more tool to the chart. So click on the indicators button one more time and search for neglected volume by DGT. The one that you're looking for is this one. Access the indicator settings and make some adjustments in a style. You basically need to get rid of everything except for the volume bars. Alright, the setup is complete. Now let's understand the entry rules. For a signal to buy, the following conditions must be met. First, there must be a change in a trend from bullish to bearish. This happens when these 3 moving averages cross the 200 SMA for the first time, and all 4 moving averages are aligned in a way so that they signal a bullish trend. The second condition is to have a 3-line strike bullish signal printed on the chart. At the time the signal is issued, the price bar must be above the moving averages. Once these conditions are met, check the volume indicator for a positive volume in the market. If the bar is green, then this is the signal for you to buy. You can set the stop loss at the most recent swing low for this strategy. Target at least 2 times the risk. Don't go anywhere. Just before the end of the video, I will show you how to increase your profits even more than that. Here's another very important rule to mention. The moment the 21 SMA crosses below the 50 SMA, that's it. No long trades should be taken after that. This rule stays in place even if the SMAs align again, signaling a continuation bullish trend. When the moving averages start crossing each other, this is an indication of a ranging market. And as you already know, this is definitely not the best time to trade. But don't worry, just before the end of the video, I will show you a trick and I have a surprise for you how to take benefit of even ranging markets. So again, as soon as you see the 21 SMA crosses the 50 SMA to the downside, abandon any long signals. Simply wait for a complete change in the trend from bullish to bearish. Here are a couple of more examples for buy signals. So the first thing we do is we check whether the current bullish trend is fresh. We see that we did have a change in momentum from bearish to bullish, and the moving averages haven't crossed ever since. We also have a bullish 3-line strikes button, which is confirmed by volume. Here's another example, and this trade also turned out to be successful. As you can see, traders, when the trend is fairly new, you do have a lot of potential. For a sell signal, wait for a complete change in the trend from bullish to bearish. This happens when white, green, and yellow SMAs cross below the red SMA, which is the 200 SMA. They also need to be aligned in a way I mentioned previously. Once you have that, wait for the indicator to spot a bearish 3-line strike button. At the time the signal is issued, the price bar must be fully below the SMAs. Once you have these conditions met, check the volume, and if the bar is red, you can safely enter a short trade. Set the stop loss slightly above the recent swing high and target at least 2 times the risk. And again, you should not be trading any short trades after you had a 21 SMA cross above the 50 SMA. So yeah, definitely give this strategy a try. It works perfectly well on lower time frames like 5 minutes and 3 minutes. So traders, definitely give these strategies a try, and I'm sure it's going to make you a lot of money. Now it's time for my surprise for you. If you want to take more benefit out of your trading and gain more than just 1 to 2 risk to reward ratio, make sure to check this video right. And it's about Fibonacci retracement levels combined with supply and demand zone, let's say price action, which I made a video previously about it, and you can increase your benefits just more than 2 to 1 risk to reward ratio. And if you want to know how to take benefit out of a ranging market, make sure to watch this video over here and enjoy it. Thanks for watching this video, and see you in the next one.